is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great year, folks. You're going to love it. And, you know, I did read this card the last day of 2022, but I'm going to read it the last day of 2023, and we'll retire it for a month or so. Always do your best. Surrender. Let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, your life is supposed to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 124, NASDAQ off 92, S&P's down 24, gold contract up $18.10, traded at $18.44 an ounce. Silver up 12 cents, $24.16 an ounce. Light sweet crude down $3.31, $76.95 a barrel. Notes and bonds. You get the 10-year note, trading up 11 ticks, 112.20. The 30-year up 30 ticks at 126.09 in King Dollar. King Dollar's up 1,021 ticks, trading 104.542. Euro is at 105. Yen is at 130. And the British pound is at 119 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we have confirmed ABC structures down in all the indices. S&P out here today, tried to get to a higher price, couldn't handle it, gave it up on price. It's gone from 386 down to 380, it hit 377. Bottom line is the building cause. It's going to go after this B point again. The B point is 377.85. We went to 377.83 today. Bottom line, this wants the lows of October, which is 348. NDX 100, that's going to be the lead dog, folks, all the way down. So the NDX 100 out here, I got to a high today of 270. You're trading 264. The closing low, we had a closing low. It was so intriguing last week, folks, because when we did have that closing all-time low, it was like no one really picked it up. Bottom line, we had that come in on the 28th. Bottom line, you're not only going after the October lows, this is an ABC structure down to 244. So if we take a look at this, we put this up, and we go look for this 244, you're going to be kind of right there. What is that? That's June of 2020. So the NDX, I suspect, is going to go to the highs of the lows of March. 219. Yeah. And I'll show you why, okay? Bottom line is that what we have is this. Let's go to Apple first. Bottom line, this is going to be a big dog, meaning in the Apple spin, folks. The reason being, you can see in 5 months, we went from 176 down to 124. Now, Apple has held up compared to the rest of the market in 2022. That being said, guess what? We get a new year. We get a new dog that wants to go a lot lower. You're breaking a swing point out here today. You're breaking this swing of 125.87. You needed 85 million shares. You're down to 82 already. This is going to be an ABC structure down, and watch it sticking out like a sore thumb. 103. And, hey, we'll find out from there. There's 103. Let me put this up like this way. As you can see, you broke the whole consolidation. Your next leg is right here. Let me put the volume on it so you can see this also. There we go. Whoops. Whoop. Give me that volume. 103 is the number. So Apple running to one. Now watch this one. Tesla. Tesla is an ABC down. This, what's going to be so intriguing here, folks, watching the aspect of the amount of wealth that has got chewed up on Tesla. So Tesla right now is breaking the B point. You need volume of 221 million. We're going to have it. We have 202 right now. This puts Tesla, okay, on a $50 path, 50. And let's go find 50. Well, 60. Look at this, man. This is sick. Put this on a monthly. So this is going to give up the whole run. The whole run. And look at this bar in December. The amount of selling that was done. 2.9 billion. So Tesla had a high of 414. You're at 107. $50. Here we come. You know. Well, and if that's what we do, you are going to see one of the biggest margin calls to come down. And this is going to be the typical 1999, 2000, high-flying stocks, CEOs, executives, margin them out. They get a margin call. See ya. Don't want to be ya. And the whole thing goes south. Gold. Let's go to the gold contract out here because there's no doubt we have divergence. The divergence is gold is up, as is the dollar. So we have a gold, you have 203,000 contracts. That's good contract volume. There's no doubt about that. Now, we had heavier contract volume, but that's still good contract volume. 231 was the highest thus far. And we'll see whether gold can hold price. It's having a hard time basically staying above this 18, well, it's really 1836. You know, we spiked last week to 1841, and hey, we'll see where it goes. Meaning, but now we go to the dollar. And what you're going to see in the dollar, and what they've been doing with the dollar, this is getting really intriguing because what we've done with the dollar is that the dollar has that nice spike out here today. It's up with conviction, right? And that being said, what has happened is that we come into the close, even last week, the bottom line is that they start buying the dollar, man. So we'll see where this shakes out. My take is that we're at 104.515, and the bottom line is that the price point that we're going to be going to is 107 and 108. And a couple of the tigers are saying that not even Tom believers, and that's not the fact. The bottom line is that there are plenty of people bullish in a monster way on the gold market. So it's just the opposite. That it's not a bearish market. I'm bearish gold. That's a whole different ballgame. The buying is out there. What you have is that my take on this is that you still don't have conviction in the move. So, hey, that's what makes the market, man. We're going to see where this baby's going to go. You stay right there, folks. We'll come right back. Dow Industrials right now down 72. Nasdaq's off 73. S&P's off 17.5. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow. Dow Industrials right now down 41, Nasdaq's off 59, S&P's off 13.5. Let's get over to our man and kick this new year off right, folks. Our man, Mr. Basil Chapman. And don't forget, Basil does an outstanding show here every trading day, 10 to 11 Eastern Standard Time, as a great newsletter, the opening call. Now, it's very easy to get the opening call, folks. You come over to our website at TFNN, go right into newsletters. You're going to see, you hit newsletters, it's going to be on the left-hand side. You just hit the opening call. You can get it for 1 month for $149. You get it 6 months for $695, which is the savings of $199 or 22%. And you can get it for 1 full year for $1195, which is a savings of $593 or 33%. Now, folks, they all come with a 30-day money-back guarantee. So as you're checking it out, you can get the 6 month, you get the year. You like it, great. You can keep it. Something doesn't work for you, 30 days, just you get full money back. Basil has an outstanding newsletter, has some archives out there that really explain to you how he looks at the market and how you ride that wave into 2023. Basil Chapman, Happy New Year.
Happy 2023.
Can you imagine?
They move along so quickly, don't they?
Oh, it's scary, man. I guess you just can't think about it, man.
No, you just got to go. Well, especially for those of us who look at the market every minute of the day. So
we're just so lucky. I mean, what a great business to be in. I mean, and we win and lose, folks. That's not what I'm saying. It's just that it's an exciting business. That's the bottom line.
I treat it as there is no day that goes by that doesn't challenge your market intellect. It just it pushes you. It's funny, even at my age, even at the decades that I've been doing this, I still feel that I'm learning every day.
I agree. That's what's so cool about it.
And that's exciting. I mean, that for me, that is the most important thing. That it's education for me, and I also feel that I'm trying to educate my subscribers, and I think we're getting there. Yes.
Totally.
So
here we go.
Talking about patterns. If you think about the Dow, if you look at this pattern on the right, let me show. This is the daily, this is the weekly, this is the monthly, and I know I always talk about the Dow. The Dow is only 30 stocks, but wow, what 30 stocks! It really represents, especially at this particular time, a perfect emblem and encapsulation of the market itself, because we're looking even in the short term when you've got this tussle going on. You can see it in the chart. We are stuck between 33,400 and 32,700, stuck there for over a week. And that, in this market, that's a long time to be stalling. But I think when I'm looking at it, the homework I did over the weekend, I had for my subscribe to my opening call, had another one of my hour videos for Saturday overview, because we were looking at all different things. Almost, I try to treat it almost like an educational video. So the thing I looked at was there's such, and I've been talking about this for the whole year, the selectivity, the rotation, when there's a correction, even within a sector, you can have just even a couple of the stocks in the sector holding the market up, that particular sector well, and quite a lot of them are just looking terrible. So this is individualization. So if people are looking and they have their favorite stock and it's been acting quite well, don't listen to the soothsayers. Look at your stuff. If you feel comfortable, put your stop in. Don't be afraid, because if it's holding well in this environment, that's a good sign. That's relative strength, and I like that. So I just wanted to throw that out, because a lot of people are listening to the news. I know I saw a lot of friends over the weekend. I mean, people I never talk market to. We just have fun together, talking about everything else. And they all were just shaking their heads, oh, this what a 2022. But in fact, I believe very strongly that a lot of people have a good eye. They just don't believe in it, and they really listen too much to what others are saying. So I wanted to get that out the way. When I'm looking at the market in the Dow, if you consider that this has really been we've had bear markets in every single in just about every single index, every sector. In other words, they've gone under 20%. But look at this, 36,952 in the Dow, down to a low of the 28,000, and then it bounces, and right now it's at 33,000. In a way, I'm kind of impressed, but it's very selective. I can't say the same thing about the other indices. So I'm going to say that for the subscribers to opening call, we are still trading. We're still long the Dow. We're still long the 3 times Dow. We're treating it as trading positions, get in and out, core positions as well. But for day traders, we have trades that last a day or two and take a profit, so we take a very small loss. That's something separate. But for subscribers, and I've been showing this to in my overview on the weekends when I show the kind of things that we're looking at for 2023, I'm still sticking to the premise that if I'm able to satisfy subscribers by having stocks in between $1 and $2, I have stocks that are in the teens, stocks that are in the double digits, stocks that are in the triple digits. Now I'm looking at stocks forgetting about price, but I want to have a range for subscribers so that if they just want to put a small amount of money to work, they can do that. And I've always say to them, you're not taking your $1 stock and buying 300,000 of them. You're not going to make your fortune on the $1 stock. Don't do that. It is just part of your portfolio, small part. Treat it as a trade, and that's what I like to do. But the other thing is, within the context of the markets themselves, we are starting to see a couple of stocks. I'm going to mention this. We haven't got into it, but it's so fascinating. GE, I mean, they did everything. That was just a textbook for Harvard students in economics to see what was done wrong from 2001. I mean, everything, buying oil at the wrong time, buying the financials. But I think GE started to improve a lot. So this is on my radar, but it's going to split tomorrow. It starts off with a split. I think I'm going to go into the healthcare. So it's a little difficult. If you had to buy today, then tomorrow you've got the split and you've got to figure things out. It gets a little complicated. So I'm looking at GE because I think GE is starting to improve because the cyclicals based on, say, Boeing, based on the really heavy duty stuff, I think that we are starting to see some improvement in the cyclicals, but you cannot get a market that's going to move very strongly unless you get the SMHs, the semiconductors, moving. And about 6 months ago, I said, I would not be surprised if we start to see a glut in the chip area, and the whole thing's going to be, does the glut come just as the automobile companies and all the other companies that need the chips are actually slowing down? So it's a double hit for them. Or is it going to be at the time when it's most desirable and they're getting a little discount on the chips? So this is going to be very important for the semiconductors, and trading at 206.95 right now. Oh, sorry, 201.40. If the SMHs in January are even able to touch 215, 217, that'll be at least a good sign. But if they break down and you start to see them 195, that's not a good sign at all. So I'm looking at the sectors and say, what can you help me But even in the semis, there are a couple that have held very well. But I need the actual index itself to show that there's strength, because as you and I have spoken about for so long, the chips really lead. I consider the chips to be like the oil used to be, still is, for the whole of the 20th century and then the 21st century. It was essential to almost everything. Chips have become the oil of the 21st century. So I think that's really important. So I've got the things that we're looking at. We've got positions that we're starting selectively, built a lot of cash for subscribers so that we can get into new positions in January, February. So we're looking at entry points and very selectively. So we're in a good position to start buying very soon.
And folks, it's very easy to get his newsletter. Come over to our website. You hit that newsletter to opening call. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom. You too.
Stay right there, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 95. The Nasdaq's off 82. S&Ps are off 20. I want to show you something here because this is pretty cool. You get a couple of the tigers in the den are basically looking at Amazon. And one of them said, let's see, Amazon Weekly looks downright bottomish last week. So let's take a look at this. So Amazon, bottom line, like the rest of the market, but took a nice hit. The low for the last 12 months is 81.69. The high is 170, 140. Now, when you take a look at this, this is so cool, man. It's sick. Okay, so we bring this up. I'm going to put this on a monthly. Okay, and what you're going to see, we've been talking so much about the March, highs of the lows. Well, the March low of 2020, folks, was $81.30. We had 3.2 million shares there. Well, the low in Amazon thus far is $81.69, which is, 30 cents higher than it, right? Yeah, 39 cents higher than it. Okay. Now, the bottom line is that it came into that test. It came into that test with 1.5 million versus 3.2. So it's like, okay, if that's a bottom, I want to show you this correlation. It doesn't mean it will happen this time, but what happened in 2008, 2009 when we bottomed out, Amazon, so check this out. This would be so weird if it happens. Amazon bottomed, and I'm going to show you this. Watch this. Let's pull this back now. Amazon bottomed, and I got to put this on a 30-year. I just want to show you how this shakes out because, okay, so picture this. Amazon bottomed in December of 2008 at $1.74. Pre-split, but the bottom line was $1.70, $1.73. There it is right there, okay? $1.73. Amazon, I remember this so well because Amazon bottomed, let's see, 3 months before the market bottomed, okay? So it's crucial that you keep your eye on Amazon because my take goes like this. My take is that this is going to be a nasty 6-7 weeks. And for some reason, man, between January and March, we could hit the bottom of March again and we start going sideways and start going up. That's my take on it. Now, want me to show you this, because when you see this, you're going to crack up. So that's Amazon, right? Now I'm going to go to the S&P. I'll put the S&P up so you can see the correlation here. So we take the correlation. We're going to go back. And here you go. There's March of 2009 is the low in the S&P, which is 666.79. So thanks for the feedback, Dan and the Den, everyone, because this is something to keep your eye on, man, because Amazon's not, listen, none of these big stocks are going away. We know how this goes, meaning you overshoot the top, you overshoot the bottom, you get some grief, and then we go from there. So it's something to keep your eye on. That's the real bottom line. Some of the higher volume equities that we have out here today, you got, let's see, we have, well, Tesla's the main one. That's down $14. Apple's second. That's down 5. You get Amazon up 2. Facebook's up 5. Maybe something to look at. Interesting. Google's up $1.37. You got PayPal up $3.56. Inside the Dow Industrials, the strength versus the weakness inside the Dow. Disney is up 2.7%. Boeing's up 2.6%. 3M's up 2%. Verizon's up 2%. Take it away from it. Apple's down 3.8%. Chevron's down 3.3%. United Health's down 2.6%. And Coca-Cola's down 1%. We go into the NDX 100. We take a look at the NDX 100. PayPal's up 5%, Facebook 4%, Pinduoduo 4%, Amazon 2%. Taken away from it. Tesla's down 11.8%, Lucid is down 8.3%, Rivian's down 6%, and what is this one? Oh, Constellation is down 4.8%. So we got some numbers out here, man. That's the real bottom line. And what you have out here today is this market actually tried to get to a higher high, couldn't get to a higher high, backing off of that number. Now, let's get over to the oil market. We take a look at oil. So oil, bottom line, normally if you're down $3, you say, oh, oil's taking a hit. Well, the bottom line is that oil's been trading up and down $2, $3 at a time like nothing, okay? Bottom line today, is it a hit? Yeah, it's totally a hit. I mean, the bottom line is that you started out at a price point of $81.50 today, and you're at 76. If we go over to the XLE, what you're going to see, and if you're in these oils, man, you better be careful because this is setting up an ABC structure down. You can see the huge expansion of volume. So the B point on an ABC down is $82.65. The problem is that as soon as you get back inside 85, which we are right now, that opens up 68. That's how this works. Okay, so, we'll see how this shakes out. If we go take a look at a couple of the big dogs out here, look at ExxonMobil first. ExxonMobil right now, not bad. It doesn't have the expansion of volume the XLE does, but I suspect it's going to make a run to this 102.37. Right now you're at 106. And we go to Chevron, which is the leader on the way down. That is, we take a look at Chevron, and we have a Chevron, you're down $5.50. That's going after the swing out here of 167. The let's go take a look. I want to pull up Meta, believe it or not, because I see that's just filling the gap. Okay, that's just filling the gap. Let's see what Google's doing. We take a look at Google. Yeah, that's not going anywhere either. Nope. That's not going anywhere either. Yeah, interesting. And let me show you something here. This one's interesting. Broadcom's interesting in the context that, yeah, so check this out. This is, the low in Broadcom, okay, is 415. The high is 672. If you are, as Basil and I were talking, there's a huge supply of chips now, folks, okay? It's a glut, and, that's the bottom line. I mean, in a monster way, not in a small way. So Broadcom is interesting because if we look at this on a weekly, see this on a weekly? This is an ABC up. 4 weeks ago, he took out a B point, took it out with volume. So I suspect what's going on with Broadcom is that the CEO of Broadcom, folks, okay, is a serial aggregator, meaning he just keeps buying companies over companies over companies. So I suspect probably what's happening, why people are buying them, is because the chip glut is so dramatic, okay, is that there's going to be plenty of companies that are for sale at very inexpensive prices because, the bottom line is that chips are a commodity. That's what they are. They're really important, but the bottom line is that, every single time that, they need more chips, all of a sudden everyone gets hundreds of millions of chips. And then, we were talking about the car business, and the car business has collapsed. The bottom line is that they overpaid for used cars. Now there's thousands of used cars. You can just look at any, basically, CarMax. Look at their charts. Their charts are a disaster, okay? Yeah. It is what it is. All of us can get such a lesson on price. It's pretty amazing. When prices are going up and they're exponential, they seem like they're never going to come down. And then all of a sudden, 6 months later, they're not even down. They're like crashing. Stay right there, folks. We're coming right back. Dow's down 70, Nasdaq's off 78, S&P's down 17.5. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 79, Nasdaq's up 85, S&P's off 19.5, and we get a question about Ma Bell. So let's go take a look at T. We take a look at this, and this is AT&T. The low's 14, the high's 21. Now check out this. You know, these phone companies pay monster dividends, folks, okay? And the phone companies are not going out of business. So you can see this. You're paying a 5.9% dividend at this price. So we take a look at this. Well, the question is because it's going to fill the gap. Well, the gap up here is at a price point of 2083 or at 1883. And now you get a small ABC up. So let's just see where that brings us. So you got 1855. That's only like 90 cents. Let's say it's a buck. So that's 1919. The swing point is 1952. Okay, let's put this on a weekly. I'll put it on a monthly, actually. Okay, so we put this on the monthly. Okay, so my take is that this will run to like 1968. And you're going to get some flack in 1968. You can see that monster buy. And in 1 month, that's when the Ma Bell went from $28 to $19. So there'll be some flack there. Pull this back. I want to see what this backed into. Okay, so it backed into all the way of 2004. You know, that's a pretty good setup. Because once you're back in, so you went down to 1446. You broke the last swing, which was 1555. The swing before that was 1461 and then 1407. Listen, I think this is a good setup, man. I mean, I think you're going to get into this $19.68, and I would just stay right there. The reason being is that, you know, you're going to get price appreciation, plus you're going to get paid to do it. You know, we take a look at, let's go to VZ, Verizon. And this got hit a little bit harder, I think. Let's go pull it back, though. Pull this back. So Verizon, the low's 34.55, the high's 55. This pays a 6.5% dividend. And yeah, this is an ABC up. This is cool. This is a good size ABC up. Let me look at this. It's $4. That gets you somewhere around 43. You're at 41. Yeah, well, this is interesting. Look at this 43. Unreal. So 43 is with volume on the way down. But 43 is a big number, man. Same type of setup. You know, there's good action there, man. That's the real bottom line. Let's go to SCCO for a couple of the tigers out here. So this is Southern Copper, largest copper company in the world. Low's 42, the high 79. This pays a 3.24% dividend at these prices. Yeah, see, this is acting like the rest of the commodities and the golds. That's why I did that. Yeah, it's having a hard time breaking. See this, the first high out here 1.5 million. Second high, 1.1 million. Today, 800,000. No, this is if you're in this, I take your money, man. That's the bottom line. That's a question. Is this an example? You can't bust them up, you bust them down. Yes, it is. Yeah. And see and you can see the strength subsided. I mean, the first high that was generated out here was the 15th of November, 1.5 million. The second high was the 11th of December, 1.1. Today's 886, and I can't hold it. Once you can't hold it, let me put this in a monthly, though. Let's see what we have here. Yeah, same thing. This is going to have to build a lot more cause. You can see, look at that. See, it's into the top of the downdraft. Just has to build more cause. That's how that baby is shaking out right now. Now let's go take a look. HG. We'll take a look at the actual contract. Oh, I see. Yeah, SCCO is going to be a shot, really. Yeah, look at this. So copper today, look at this. Yeah, 81,000 contracts from highs to lows, monster contract volume. It's going to go break the 372. Let me see this over here. What is that, 372? Okay, so 372 is going to be the number that you really want to keep your eye on, because if it does break the 372, that puts it in the lower range. You know, but this is a big spike in volume. Looking at the futures contract and what's going on. And listen, all of these, you know, the dollar itself, the higher that the dollar actually goes, that's when you can see a basically rip lower inside of commodities, you know. Now, my take on the dollar is that we're only doing a counter trend bounce. So if I look at the dollar, put this up, I'll show you where I'm getting both the 107 and 108. So you can see the 107, excuse me, folks, 107, 160 is a 0.382. The 108 is a 50, and then the 109 is ice. If we bounce that high on the dollar, that's the ultimate plan here would be, if you see this bouncing all the way up, and then simultaneously the markets are finishing the ABC structure down, that is going to be the ultimate buy. And you have to do these scenarios in your head prior to it going there, folks, because when you're buying lows, it's very hard to buy. You know, because if it is the low, the way that lows work is that if it is the low, meaning I'm talking about 6-7 weeks from now, if it's the low, what ends up happening, you come into the low, you get off the low. And then for a good 3 to 4 weeks, man, it just keeps everyone on edge. Meaning, you know, tries to get back down there, gets up. Back down there, gets up. Back, and then it just takes off. So we'll see how this whole thing shakes out. My take on the aspect of interest rate structure, which is going to affect everything, is that interest rates are not going down. You know, that's my take on it. I'm talking about for a full year, maybe even over a year. You know, you're not going to go back to 2% inflation with interest rates going lower, because what we do have is this. If you remember the aspect of, well, today, if you happen to be on Social Security, you just got an 8% raise. And then on top of that, what ended up happening, because they put Medicaid up last year, Medicaid's not going up because they raised it too much. So bottom line, retirees get, you know, that 8% raise, okay? That's on the table. What we also have, which is a larger piece on the table, it's not going to be the same as was during the pandemic, but there is a huge amount of dollars coming into cities for infrastructure. That is going to keep supplying jobs. That is going to keep supplying dollars into the marketplace. Now, that being said, as one of the Tigers are saying, this is the first time, and I brought this up last week, that the money supply has contracted. This is the first time in 13 years. That's what he's saying. We're looking at this chart, and you can see it. Look at that, 13 years. It looks to me like when I look at this chart, I've never seen it go down. But we have just gone down. You can see this as clear as a bell, man. And they're going to keep bringing the money supply down. And that's how you get to a 2% inflation rate. Stay right there, folks. Come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials right now down 19. NASDAQ is off 70. S&P is off 13. Let's go take a look at Hershey. Okay, so we take a look at Hershey out here. The low in Hershey for the 12 months is 190. The high is 242. And this right now is trading out at 226. Put this back. So you're coming down with volume. Yeah, if you go and chart this, man, yeah, be all over it, man. Yeah, I mean, this has a high volume low at 211. It has another high volume low at 201. And you want to see something that's insane? Hershey's trading at 27 PE. That's like insane in this market. 27 PE? They don't have any growth. Well, yeah, I'll show you what they have. They might have like 5 or 10% or something, but that's 700,000. Yeah, they have 0.7%. Yeah, I'm not quite sure why everyone kept buying Hershey's, but yeah, the bottom line, I shot the heck out of it. And that's how that's laid up. You don't. There's not many like equities out here that are trading that high a PE, folks. they were the beginning of 2023, 2022 rather. There was hundreds of them. You just don't see it because guess what? Who's going to give you $23 for $1 worth of earnings when, the bottom line is that you have many of these things trading down at 14, 13 that actually do have growth behind them. So we'll see where the whole baby shakes out, but the bottom line is that my take is that Tesla's going to keep going lower. Apple is going to be the story of 2023, meaning that, it's down, but guess what? It's going to be down a lot more. Well, Tesla will, because if Tesla goes to $50, you're going to see the biggest margin call in history on good old Elon Musk. Always remember, folks, the bear can claw your heart out. The bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great weekend. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at them, folks.
Building